Waiting on everything's clear, everything's calm, audio check. Yeah, it should be steady. Alright. Okay, hey guys. We're gonna do a bit of stomach effects here. We're gonna be doing a bit of market outlooks, a bit of market previews, what we think's gonna happen. Right now we're gonna be looking at a bit of bonds, treasury bonds. Gonna be looking at a bit of dollar, gonna look at a bit of pound dollar, and we're gonna be looking at a bit of euro dollar. Alright, so let's get started. Firstly, what we'd like to see is bonds. Bonds has on the monthly, well, last year it had taken those lows. This year it was stuck in a range, as you can see. Why? Because obviously bad people in the White House looking at potential wars and all of that jazz. So we're not going to see much movement because not many people are that interested in putting their money where there's bare risk. But now Trump's in house, so it should be better. Alright, first thing we'd like to look at on the monthly for the bonds, we can see that the order block here has been respected. This the order block, it's the last down candle before the up move. Went up, down, respected that this year, went up, took out buy side, went down, took out sell side into the liquidity void, and as you can see, went down into the month, respected it. Are we going to see further rejection from this low and here, back up into here for next month? That's what we would like to see. Okay, so if bonds are going to go higher, you can also see that on the 10-year, you see rejecting off here. Well, that's what we want to see. Here, it's a bit more techy, but got the liquidity void. All of them refusing to take up that low. Okay, so if we now go on to the weekly, we can see further areas where it's respecting, right? So over here, you can see order block, fair value gap, all that jazz. Over here we can see order block, fair value, respecting that. Can't see any fair value gaps here, so if it is going to continue lower, it's going to continue lower here or something, or it's going to have to go up here. Why? Because there's no fair value gaps within this range. The nearest one is here, but of this range, here is the most likely fair value gap that it's going to go to, or here. Why? Because it's above 50% of that range after taking sell side. So yeah, we're looking at around here minimum. For that, obviously would need it to break past this liquidity void and break past the consequent encroachment of this liquidity void. We can also see on the 30-year note, as you can see, that order block respected, no fair value gap, minimum one there, so gonna have to go into there. Alright, so now let's go on to dollar with that analysis on the treasury bonds. So on the monthly, as you can see, it's respecting the constant encroachment of that wick. As you can see, 0.5 and then went down lower. So balanced price range, went above it, went lower, didn't want to go into this one. Why? Because it's created that with this candle and this candle, balanced price range, went up, took out sell side, well, buy side first. Now we're going to look for the next couple months to seek sell side. Alright, that will be these equal lows. You can see the black line here, black line there of it taking buy side. So we took buy side. December is normally a bearish month, and so is the end of November, according to the historical charts data. So yeah, took out buy side. What we want to see now is dollar go past this high and break it and close below there. Why? If we've got a bearish stance, we want dollar to go, we don't want it to give an excuse for it to go even higher, right? And that will be like an immediate rebalance, so like going here, wicking off, going even further. So we don't want to see that. We want to see it break past that, ideally into here. I don't think we're going to get to there unless CPI on Wednesday for pound does something decent and helps with that movement. But yeah, took out buy side. Now we're looking for sell side. But yeah, of this range, 50% around here. So we would like to see it go into here. Obviously, December is going to be bearish. I would like it to get to around 50%. And this is the timing stuff I use, right? So why do I use 10th of December? Because on foreign exchange, the second Monday is normally the Monday which contracts end, right? So December contract starting there, so start with there until end of that. No, that's just a week one. That's not a week one, that's a yearly one. Yeah, so that's the year one. So start of the year went up in the light grey area, reverses, boom. Would like to see the end of the range that creates here in this blue part. We see it here, and it starts going up, taking sell side, preparing for next year's, which is most likely going to be bearish. So now that we've got that out of the way, we need to go on. Let's start with euro dollar because it was the weaker of the two. Okay, so as you can see here, took out that, and on the weekly and on the monthly, the consequent encroachment has been respected. Would like it to go past here as well. Like it to see it in there, and then once it gets into there, the week after, would like it to use this as an inverted fair value gap to continue high up into here or something. I don't know about next week, but week after potentially, because I think it's going to be end of P then. Not too sure. I'll have to look at the weekly candle, which is up here. November term. So that's that one. It's the week after. Yeah, week after is gonna be got FOMC. Might do it during FOMC, but not too certain. Obviously, it was a big week. This last week, next week, if we get there, less likely to get a big week, but we do want it past there. Euro dollar. So now let's look at pound dollar. Pound. So yeah, same idea with pound. Took out this low, filled in the rest of that fair value gap, which was left open with this. So over here you can see it on my futures one. Like so you can see how it's went into there. So would like to go past up here. Why? Because over here is where that immediate rebalance is likely to happen. So if we go past it and close above it, it gives us more confidence on the bullish tone. Not only that, we've got let me see if I can yeah, I could do this. Voila. So this barchart.com, I use this to see the commitment of traders report. So we want this candle. Let's say on the year indicators, commitment of traders. We don't even want that. We only look at the red line anyway, but we see the blue line. So yeah, as you can see, within that year, it's taken this highest amount of buys starting to go lower. This high is actually lower than this, but they done more buying here than here. It's more likely to go down. The high and the low, middle of the red would be around here. So we would like for price to get into here, like at least around here, 10k, minus 10k net, for us to be confident in continue going short for like on a very higher time scale. Let's look at the 3-month. A 3-month, as you can see, from that high to that low is starting to go lower. So yeah, if we start to see movement higher, we'll wait until this has been taken, but I think it's less likely. Now that Trump's in office, that should have got everyone starting to buy dollar in it. You know, oh yeah, dollar's going up now. Trump's elected. Boom, boom, boom. Next thing you know, take it out and take out majority of the people offside in it. So yeah, that's what we want to see. Done that, so we want to go higher. Let us look at the daily. This will allow us to see what the daily is most likely to going to do. So I feel, purely looking at this, let's get the daily on here as well. We'll get the calendar up for this coming week, and we'll see. Okay, so Monday, not all too great. You got FOMC member, but it's lower thingy. Housing market index that will be 10 a.m. Eastern Standard. Tuesday got a bit more. Wednesday we've got CPI, coal inventories. So yeah, Wednesday, Tuesday, Friday is very heavy. Thursday as well. So Thursday, so not much on Monday. Tuesday a bit. Thursday a bit. No, Wednesday a bit. Thursday a bit more. Friday a bit more. So with that in mind, what are we predicting? Monday, not too much movement. Monday, most likely we're gonna see up maximum into 25% of that. 25% here. Make sure that wick closes below here. We don't want to see it go past that, because if it does, it's not the greatest. So yeah, we don't want to even go above here really. Potentially down into there, create that range for the next day. Most likely going to go into there. Wednesday, go up a bit by 2 a.m, head it lower, most likely to there. Wednesday, down into there. The Friday, down to there, retracement a little bit, and then yeah, that's what we are predicting. So we want to see a bearish week next week. So that is very likely to happen. If we look at the 1 hour, we've been seeing, so that's a week. Yeah, so that is what we are seeing. As you can see on here, it's potentially flirting with this fair value gap, but it's going to be Sunday when it opens next, so we don't know if there's going to be a Sunday gap bringing it lower. We don't know if Sunday is going to bring it higher, up to there, back lower, take this out, and then come back lower, uses the inversion. But yeah, that is pretty much it for now. Let's go back on there. So you see how pound is very bearish. Euro dollar is a bit more bullish than pound. Why? Because the final day on Friday didn't take this low. But yeah, it did respect this. That's why we've got to be wary. Got to wait until I'd say about Wednesday to start seeing, alright, has it broken past this? Has it broken past this? For this to be used as inversion to then go higher. But yeah, that is our predictions. But yeah, if you enjoyed, please give it a like, and yeah, thank you all very much. Gonna have more of these. If I do feel like trading on a specific day, I may end up live streaming. I'll try do this every week, give a little market outlook, and yeah, feel free to see my accuracy. Thank you everyone for watching, and yeah, peace and goodbye.